Good weekend, all. Ira Epstein of Linn Associates with your weekend update, and this is different. This is when we do the longer-term charts, and this is your agriculture update for August 30th, the last trading day of the month, 2019. I want to wish you all a great Labor Day. I will be off until Tuesday, as most of you will too. Of course, those of you out of America, you got a work day. What can I tell you? In most cases, there are some holidays. So as we look at the markets and the agriculture, now that we're into September, we're getting to the point where what happens with weather? I always look out at the 30-day forecast, although they can't seem to get what Hurricane Dorian's going to do when it's only a couple hundred miles offshore. How do you look 30 days ahead? But the 30-day forecast is for wet and cooler temperatures in a great part of the key soybean and corn areas. That's all. That does not mean the market goes up on that news. In fact, today corn was down 1.5 pennies, wheat was up 0.5, and soybeans were up 0.5, and wheat got down 10. In the energy sector, and I always mention the energies here for that because of ethanol and so on, obviously Hurricane Dorian's playing a great role. Whatever the swath is going to be of that will come into play. So when we come to the charts, the first chart I look at on soybeans is a monthly chart. And for a monthly chart, you're still under the 18-month moving average of closes. Therefore, the bias is to the downside. When I go to the weekly charts, I see a distribution area right here. So we had a market that had a distribution area up here, came down, and it's just been playing around. Now you get another level to the downside if you close under the, let's call it the 838 level. That could bring you back into this zone over here, but you first got to get down and close there. What's the pattern? The swing line pattern is bearish. You have lower highs, lower lows. We don't know yet what the low of this swing line will be. We do know that for the week we were up 13 3/4 cents, so we did make a lower low and close higher, but that didn't get through the old swing line of 872. Take that number out and you change the pattern of the chart rather dramatically to higher lows and higher highs. So where would the resistance in moving averages come in? The 100-day, well, this is the 100-day way up here. I don't think it's in play. The 18-week moving average of closes is what's in play. And that number is 864 1/4. So if you take out 872 and you can close over that 864 1/4, at least on the weekly charts, you would have two things. You'd have the swing line turn up and you turn the bias up. The bears don't want that to happen. What the bears want to happen is take out 837 1/4, not get through 872. Maybe you can push to the lower Bollinger Band. As for momentum, down. So ending the week, we have the swing line down. The bias is down since you settled under the 18-week average, and momentum is pointing down. In the meal market, a downtrend still in existence. And remember, on the weekly charts, I don't look to see if a market's overbought or oversold. I find that what I've taught in slow stochastics works best at looking as the momentum on a weekly chart, up, down, or sideways. It's down. The bias is down because we're under the 18-week average of closes, and the swing line's got lower highs, lower lows. What could negate the downtrend is taking out 298.30, right here, this high. That would break the pattern of lower lows, lower highs. It would not start a bull pattern because even if you took that up, you have a lower low and then a higher high, and resistance right at 302.80. So it's different than the soybean market. The pullback in the oil is very much intact for still a bull market at work. You've had the higher lows, the higher highs. Here's the problem. I don't recall bull markets in the soybean complex lasting where oil is stronger than the meal. I see it with the other way where the meal's leading the soybean. So this pullback tells me that the market in terms of the overall thrust downside is still intact. Support right here where it came in, 27.91 is the 18-week average. 27.90 was this week's low, and you finished out near the week's high. Not bad action, still intact to the upside. Corn is still bearish. Lower highs, lower lows. First resistance, if you rally, might be this the 100-week average, then the 18-week. But This average didn't work very well. You got, if you'll notice, you fell through it and you didn't even come back to it. So on the way up, the question is, will that act as a resistance point? I don't have the answer to that. Often I like to see it at least stall at that, and it didn't do it. It just fell further through it. Obviously, you're putting into the 330, 340 area if you keep going down. In the wheat market, downtrend, lower highs, lower lows, new break low, momentum down, bias down, two levels of resistance, 483, 40, 491 and a quarter. Cocoa market still very much in a downtrend. Momentum pointing down. The bias is down since you're under the 18-week average. You've got the pattern lower highs, lower lows. So I like the idea of where are the swing lines. I like to have the bias. I realize that when you get under a Bollinger Band the way you did here, one of the things I'll tell you is the odds of staying under it only 5% of the time. It's going to move to the right-hand side. It does. That doesn't mean the trend has changed. You're looking to see what you've done. On the next pullback, you went only to the lower Bollinger Band, and I think the pros took some money off the table. But the trend hasn't changed. To break the downtrend, you've got to get over last week's high, 22.38. In the sugar, still very much in a downtrend, but each time you've hit this lower Bollinger Band, you've had one of these contra trend bounces. It has not changed the overall big trend, which is down. And what's hurting these markets to a certain degree is a lot of them are priced in US dollars, and the dollar is just gaining on practically all currencies. Very, very important to keep in mind. Coffee, higher high, lower low. That is not the market that I look for a trend per se. I'm not blind. I see that the market went all the way down like that, and the daily charts helped more in that type of trade than anything. But this big break means you're subject to a reaction at any point that can be numbing. You got to be careful because the first resistance is 98.07, and that's 500 points away. Cotton still bearish. Lower highs, lower lows, momentum still to the downside, bias down. Will you get to a lower Bollinger Band? I would assume pros would be looking at that number, 55.45, for maybe an area to cover some shorts, but I don't think other than that they'll worry unless you get back over 60.12, and then you've broken the pattern of lower highs, lower lows. In the cattle, still bearish. You've got the lower highs, you've got the lower lows. Now this right here, area when you got over that high, that's bothered me all the way through. So I'd like to see if the market can take out the low of this week and follow through. I see divergence is what's my problem. I see momentum going up while I've got the bias down, and I question, because this high did take out that swing line, what to do with that market. In the hog market, it is still a bear market. And I realize traders all over are still hoping China and the U.S. do something so that there's hog purchases and soybeans. Unfortunately, I just don't see it. There was some hope today when China took and said to Tesla, hey, we're not going to keep taxes on your cars. That was phenomenal. But there was nothing out of the president, our president back, that said, well, maybe we won't put on those September 1st tariffs. I think he's going to play his game right on through. And I don't know that he's wrong. I mean, what he's fighting for is right. Obviously, there's pressure on us, but stock market's not falling apart either. So I look at this, and what do I do with it? Well, here's what I do. I start you off in the morning with a chart action that looks just like behind me. And the idea here is to give you ideas about trades that I'm seeing. Maybe that helps you with your trade selection. I said hurt, but I didn't mean that, believe me. And the idea is I get up and start reading 4:35 in the morning. By 5:30, I've read everything that I need out of Asia and out of Europe. My headlines, the stories that I want, and I can start talking to you. So by 6 a.m., typically, somewhere between 5:30 and 6, I start recording. And I'm going to review 40 charts, typically 5 ETFs, about 45. You'll say, well, how long is that and what are you doing with it? Well, let me explain it. I'm going to go through the fundamentals in the morning, and then I'm going to give you all the technical analysis, much more than you get here. This is baby stuff. It's going to be a lot more in my morning video. The video's long. It can be 20, 25 minutes in the morning. That's not what it's about. I don't expect you to look at the whole video. You don't have to. You can learn from it, but the idea is I'm going to throw point of entry, get out here, I'm wrong, I'm right, here's the profit objective with it. The charts look different. They're going to look with a black background, and they're going to have more studies on them. We're going to use a few more moving averages. The beauty is I do everything in this exact sequence, and there on the bottom is a slider. You take the slider and you move it, it's going to light up and say foreign currencies. It's going to say grains. It's going to say cattle market, whatever section you want to be in. There's also a lexicon on the side right here. You can click that. So let's assume you're looking for something in a special market and you don't want to deal with foreign currencies. You don't want to deal with whatever. That's fine. Go to the other area. I charge for this. It's not free. It's not going to be free. 26.5 cents a day. Yes, it's not worth laughing about because that's $7.95 for you to see, do you like it? If you like it and you stay with it, it's either $15 every 30 days thereafter, and you can quit at any time, or you can decide to go for a year upfront subscription for $156, which is $13 for every 30 days, but you pay a year upfront. How do you find out more? Because it's explained on our website. You can go there under education or research. You're going to find Ira's morning subscriber video. Click that link. It explains it all, and that's where you can sign up. Don't call us over the weekend. Wait for Tuesday. And you can also click here. It'll take you right to that part. In the meantime, you have a great Labor Day weekend. I'll be back on Tuesday. You take care.